SK Hynix just posted the best quarter in its history, and Korea tripped a circuit breaker anyway. Plus 4 more stories moving the AI tape today. Let's get into it. SK Hynix reported the best quarter in its history, and the stock fell roughly 10%. Revenue of 79.3 trillion won, up 257%. Operating profit of 60.5 trillion won, up 557%, at a 76% operating margin. It still landed short of consensus. The Kospi dropped as much as 8.2% intraday, closed down 5.98%, and triggered a market-wide circuit breaker for the second consecutive session, the first back-to-back pair in Korea exchange history. This is the pivot the market has feared all month. AI memory is no longer beating expectations, only meeting enormous ones. The bear case is written into the tape. Investors are betting hyperscalers are building more data center capacity than end demand justifies, with HBM4 entering mass production straight into that doubt. Watch Microsoft and Meta tonight. Their CapEx guidance either validates Hynix's order book or confirms the top. Microsoft and Meta report within minutes of each other after today's close, into the worst possible tape. A second day of Asian chip carnage, Brent crude above $85, and a 2 p.m. Eastern Fed decision, where a first-rate hike in 3 years is back on the table. Beats are already about 95% priced on both names, which leaves exactly one line that moves the stock: fiscal 27 CapEx guidance. Consensus has hyperscaler CapEx climbing from $384 billion to roughly $682 billion. Meta has already raised its own by more than $10 billion, to about $137 billion. The bear case: Alphabet's $205 billion guide last week is precisely what started this derating. Spending is compounding faster than AI revenue. If either name guides CapEx higher tonight, expect the selling that hit Seoul to cross the Pacific. If they moderate, the CapEx light trade unwinds fast. 1,171 employees across OpenAI, Anthropic, Google DeepMind, and Meta have signed an open letter asking Washington to help deliberately pace AI development. The signatures include Anthropic Chief Executive Dario Amodei, OpenAI Chief Scientist Yakub Pachaki, Meta Chief Scientist Shengjia Zhao, and DeepMind Safety Lead Anka Dragan. The target is narrow and specific: recursive self-improvement, the point at which AI systems build their own successors. This is not the 2023 pause letter. The ask is for government-backed technical tools and governance mechanisms rather than a moratorium, a materially more enactable request, and internal industry pressure has historically preceded regulation far more reliably than outside advocacy. The bear case for the trade: a federal pacing mechanism would be the first regulatory constraint capable of altering frontier lab release schedules, and release schedules are what compute demand curves are built on. Watch for a named legislative vehicle before the fall session. That is when this stops being a letter. The Model Context Protocol shipped its largest revision since launch, moving from a stateful bidirectional connection to plain request and response. That single change lets MCP servers run on serverless and edge infrastructure instead of long-lived processes. Session affinity was the main blocker to putting agent servers behind a standard load balancer. The spec adds hardened OAuth 2.0 authorization and a versioned extensions framework. Anthropic shipped support on day 1, and AWS Agent Core Gateway followed. MCP has now passed 400 million monthly SDK downloads, a 4-fold increase this year, and governance has moved to the Agentic AI Foundation under the Linux Foundation. It is no longer a single-vendor protocol. The bear case: ceding vendor control turns Anthropic's protocol lead into a commodity, and download counts are not revenue. The signal to watch is enterprise deployment volume. If serverless MCP drives a step change in production agents, that is incremental demand for exactly the data center capacity Sol just sold off. Apple closed at a record high Monday, taking the world's most valuable company title back from NVIDIA. Roughly $4.94 trillion against NVIDIA's $4.75 trillion. Apple is up more than 22% this year, the best of the Magnificent Seven. The reason matters more than the ranking. Apple rents AI capacity instead of building it, and the restraint that reads as strategic weakness. 18 months ago now, reads as balance sheet discipline. NVIDIA lost the crown after a 5% single-session drop tied to the repricing of its roughly $750 billion deal book. The bear case. This is a rotation trade, not a fundamental one. Apple's AI product story has not changed. Only the market's tolerance for CapEx has. Tonight settles it. If Microsoft and Meta guide CapEx higher, the CapEx light trade extends. If they moderate, Apple hands the crown straight back. One through line today. The market has stopped paying for AI spending and started demanding AI returns. Record profits were not enough in Sol, and CapEx guidance decides the tape tonight. Subscribe for the full briefing every weekday before the bell. This has been the Daily Alpha.